Okay, so you're here because you're trying to get your head around crypto trading, maybe make it work better for you.
Mm-hmm.
And you want to do it, effectively.
Right, without getting overwhelmed.
Exactly. So today, we're going to zero in on something really important. USDT Tether.
Yeah, that's stablecoin, the one tied to the US dollar.
It's kind of like the crypto trader's panic room, isn't it? A stable spot when everything else is going wild.
That's a good way to put it, a safe haven. And we've been looking at some material from Dr. Puyan Gamari, a Swiss economist, really sharp insights on this stuff.
Okay.
And he points out that just knowing USDT is stable isn't enough. The real challenge is using it right.
Ah, okay. So there's a common slip up.
Yeah, a big one, actually.
Yeah.
Releasing that USDT, well, too early in a trade. That's what we're diving
Oh,
into.
got it. So the mission for this deep dive, for you listening, is figuring out why letting go of USDT too soon is a pitfall.
And how to avoid it.
Right. How to use it smarter, be more calculated. Okay, let's maybe start with the basics then. Why is USDT such a big deal in crypto trading?
Well, it really functions as a buffer, like you said, a shock absorber. Its value is pegged to the dollar, right?
Mm-hmm.
So it doesn't have that wild volatility you see with, say, Bitcoin or Ethereum.
Oh, yeah.
Dr. Gamari gives this great example.
Right.
Imagine Bitcoin's price just tanks. You can quickly sell your Bitcoin for USDT.
Ah, okay. So you swap it out?
Exactly. And you basically protect yourself from those immediate sharp losses. It lets you step aside while keeping your value stable.
Like hitting pause.
Yeah, precisely. It's a fundamental risk management tool.
Mm-hmm.
Essential, really.
Okay, that makes sense. A way to pause, catch your breath.
Mm.
But here's the tricky part we mentioned, the temptation to unpause too quickly.
Oh, absolutely. Especially if you're newer to trading, you see a little price movement, you think, time to jump back in, maybe chase some quick gains.
And that's the trap.
That's often where things go wrong, this eagerness. It can mean you miss out on bigger opportunities later.
Also,
Well, Dr. Damari points this out quite clearly. You release your USDT too early, maybe during a correction or when the market's just moving sideways.
right, consolidating.
Yeah. And then the asset, maybe Bitcoin, again, it recovers, it bounces back strong, but you jump the gun.
So you sold your stable USDT, bought back in maybe a bit lower, but then missed the real climb back up.
Exactly. You kind of locked in a minimal gain or maybe even just broke even instead of catching the bigger wave. Patience can really pay off there.
It's like you see a small dip, panic slightly, sell your USDT,
Mm-hmm.
buy back thinking you're clever, and then it shoots up right after you bought. Ugh,
It happens. And this ties directly into, market psychology.
the emotional side, fear and greed.
Definitely. Fear of missing out, fear of more losses.
Yeah.
These are powerful drivers. They can cloud your judgment, make you act impulsively.
And timing the market perfectly is.
Oh, basically impossible, right? Pretty much, yeah. Dr. Gamari's work touches on this. Trying to nail every tiny peak and trough, it's usually a losing game. Reacting to every little flicker on the screen, it's exhausting and often counterproductive.
Better to look at the bigger picture.
Yeah, look at the broader trends. Use actual data, not just gut feelings triggered by a sudden red candle.
Right, okay, so avoid those knee-jerk reactions.
Yeah.
You mentioned something about confirmation earlier. What does that mean in practice?
Good question. Confirmation is a key idea in technical analysis. It basically means waiting for more evidence before you act.
Okay, so not just jumping on the first signal.
Exactly. Don't act on just one indicator or a hunch. Let's say you think a price is going to rise. Confirmation might be waiting for it to decisively break above a key resistance level.
Like a price ceiling it's been hitting.
Precisely. Or maybe waiting for a couple of technical indicators like moving averages to align and signal an upward trend before you deploy your USDT.
I see. So releasing USDT without that confirmation.
Means you're trading on an assumption, not a verified signal. More risk involved. Higher chance of missing out if you're wrong or getting back in too early.
Makes sense. Be more patient. Wait for clearer signs. The source material also talks about just riding out the bumps, doesn't it?
It does, because short-term volatility, those sudden ups and downs, they're just normal in crypto, often exaggerated too.
Yeah, things can move fast.
Very fast. And Dr. Gamari highlights that if you sell your USDT at the first sign of a small dip, you might just miss the bounce back that often follows.
So experienced traders kind of expect this choppiness.
To a degree, yes. They understand it's part of the game. They're often prepared to hold through some initial volatility, knowing the market frequently recovers. Panicking and selling USDT early, you could lock in a loss just before it rebounds.
Right. Don't jump overboard the first waves if the ship's still sound. And constantly watching must be draining.
Oh, incredibly. Which leads to another point Dr. Gamari raises: psychological stress and decision fatigue.
Just getting worn out.
Exactly. Staring at charts all day, making rapid-fire decisions. It takes a toll. Your judgment gets fuzzy.
And you might just sell the USDT to, what, make the stress stop?
Sometimes, yeah. You make an impulsive move, like selling early, just to relieve the pressure, even if it's not the best strategic decision.
So having a clear plan helps combat that.
Absolutely. A solid, maybe longer-term strategy gives you structure, reduces the need for constant high-stress, in-the-moment decisions.
Okay, this is really helpful in understanding the why holding USDT can be tricky. So let's pivot to the how. How do we avoid releasing it too early? What are the strategies?
Right, the actionable stuff. Well, the first big one Dr. Gamari stresses is adopting a longer-term perspective.
So zoom out.
Pretty much. Try not to get completely sucked into the minute-by-minute noise. Focus on the larger market trends, the bigger picture.
Doesn't mean you can't do short-term trades, but
No, not at all. But having that broader view helps you assess things more calmly, wait for better entry points for your USDT. Think marathon, not just the next 100 meters.
okay, longer view. Got it. What else?
Being informed, using the tools. Successful trading isn't just luck or gut feelings.
Right. Analysis comes in.
Exactly, both technical and fundamental analysis.
Okay, break those down quickly.
Sure. Technical analysis is looking at the charts, price levels, trends, patterns, trying to predict future movements based on past behavior. Support, resistance, indicators.
Like reading the market's own tea leaves.
Kinda, yeah, but based on data patterns. Then fundamental analysis looks deeper.
At the why behind the price.
Exactly. Things like adoption rates, economic news, new regulations, tech updates for a specific crypto, things that affect its underlying value.
So combining both gives you a fuller picture.
Definitely. You move beyond just reacting to price flashes and make more educated guesses about when to hold that USDT or when it's really the right time to deploy it.
Makes sense. Use your brain, not just your nerves. And the last strategy seemed very practical.
Extremely practical and crucial, setting clear entry and exit points before you even think about trading back out of USDT.
Define your targets in advance.
Yes. Know the price where you want to buy back in, and just as importantly, know the price where you plan to take profits or cut losses if it goes the wrong way.
Takes the emotion out of it when things get heated.
That's the goal. You make the decision when you're calm and analytical, not in the middle of a market swing driven by fear or excitement.
And using tools like stop losses.
Absolutely. Setting a stop loss automatically sells if the price drops to your predetermined level, limiting your downside. A take profit does the opposite, locking in gains when your target is hit.
So these automate the discipline, kinda.
They help enforce it, yeah.
Yeah.
They prevent you from second-guessing and maybe selling that USDT too early just because you got nervous watching the chart wiggle.
Okay, so wrapping this up then. The main takeaway seems to be USDT is great for stability, provides that safe ground.
Essential tool.
But when you step off that ground, when you release the USDT back into a trade, that timing is super critical.
It really is. Releasing too early, based on what we've seen from Dr. Gamari's work, is a classic mistake.
Leads to missed profits, maybe unnecessary losses, all because of impatience or emotional reactions.
Right. You jump off that stable platform before the storm's really over, or maybe before the next big wave you want to catch has properly formed.
So it comes down to, what, patience?
Patience, definitely. Informed analysis using both the technical charts and the fundamental background.
And having a clear strategy.
A well-defined strategy, absolutely. With those preset entry and exit points, maybe using stop losses and take profits to keep you honest.
These aren't just ideas, they're actual steps people can take.
Concrete steps, yeah. To manage USDT better, trade with more confidence, hopefully more success.
Okay, so final thought for everyone listening, building on all this. Considering these insights, what specific adjustments could you make to your own crypto trading approach? How can you better manage your USDT, especially when things inevitably get volatile?
Yeah. Something to really think about.
Definitely food for thought. How can you apply these principles to your trading journey? Thanks for taking this deep dive with us.